Hi, Henry here. So I thought it'd be applicable, as we deal a lot with US expats, is to deal with expats in the US. Now there's around 9 million, a lot of people, and just go over some of the tax options, or sorry, should I say investment options that you do have in the US, how to optimize these, and also as well as a bit of the investment options. Because you have a lot of options open to you in the US, both locally and internationally, so I just want to cover both of these in a quick video. I have read a blog about it, so we'll try and link it below. So some of the options that you do have if you've been set on a contract in the US is maximizing your retirement plans. Now these come in for the majority of people in terms of 401k or IRA with pre-tax dollars. Maxing these amounts would be advisable, so matching your employer contributions if you can on your 401k, putting up $6,000 into your IRA. If you are maxing these out, or if you have limited these and your income is under 214,000 as of 2022 US dollars, have a look at a Roth IRA. These can be put in with post-tax dollars. And for expats, it's a lot more flexible, so you can take out the contributions tax-free at any times of what you put in. You don't have the same requirements of 59.5 having a tax penalty, as well as your ordinary income rate of taking it out. And also at the other end of the scale, there's no RMD, so you don't have to be 72, or on April the 1st after the year you turn 72, you don't have to take it out and get hit with a tax burden as well. So a Roth IRA for a lot of expats may be a lot more flexible, because you can take out, there are limits in what you can put in. Like I said, you've got the income limit. If you go over that, then it's not applicable to you. If you're under the income limit, it's 6,000 US dollars. If you're under 57,000, if you're over 50 to catch up. And other options, you've got 529 plans that you can do if you've got children. Also, it could be done for yourself as well. If you go back, you can put it into a state with lower tax basis like Utah, which can lower the tax burden on that. Also, so you've got health saving plans as well. If you're a high deductible health saver, 3,650 as of 2022 for an individual, 7,200 for a family, and when you're over 65, you can withdraw that withdraw the gains tax free. So you can put it into using it as a retirement account as well, put it into the likes of ETFs, bonds, treasuries, etc., to allow that growth. And if you take it out for non-medical purposes over 65, it can work out tax efficient. The other one is annuities. Now there's two kinds, fixed and variable. Fixed is more is fixed. Variable is classed as a security. Fixed is classed as an insurance. They can go, again, allow for tax-free growth. Fixed, you can get a set amount growth. Variable, you can get equity growth into it as well. So there are a few of the options as well that you can have. Other than that, you have your kind of non-tax options, so your investment accounts. These are quite wide range. Some of the top platforms are Interactive Brokers, TD Ameritrade, and you've got your private banks. Now, just to go over the cost basis, also you've got Vanguard as well. Some considerations: make sure it's flexible for you as an expat. We do deal with expat specific platforms, and make sure they are portable if you go back, so that's something to bear in mind. Cost basis should cost no more than 0.5% for a platform, and for an advisor 0.5 to 1%. Again, and plus the fund cost depending on what you're looking for. So there are your options, guys. I hope you find it quite useful for you, and in terms of your options and tax abilities as well. And what we've talked about before is, if you do move back, look at potentially rolling your 401k into an IRA. It gives you more flexibility in terms of your investment, and from a tax perspective, you can take from the loss. So there's a few options for you guys. Hope you find it useful. Thanks a lot. Cheers.